Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, guys. Let's keep going with our euro currency analysis. So as we said in the weekly report, it's a very interesting time to the forex market in euro currency in particular, because based on the analysis of the sentiment that we see currently, investors starting to have some doubts on Fed policy. So previously it was common opinion that somewhere in August and September we should get the tapering. And actually this public opinion and investors' opinion still takes the majority on the markets. Maybe this will happen indeed. At the same time, as we said, we are not excluding some changes in this probable Fed statement that will announce the tapering. The most radical change it might be that Fed will not announce any tapering on September. Softer results of the Fed meeting in September, it might be, for example, not as significant amount of the tapering as market expects to see. At the same time, as a manager of the BlackRock said, in general, if they will close all the tapering right now, so and stop buying bonds from the market totally, it will not make the significant impact on the market itself. This will be mostly a psychological effect. Why? Because, well, Fed buying is approximately 120 billions per month. So with the market of the 10-year bond approximately around 22 trillions, stopping buying this amount of the bonds, this will not make the significant impact. So we also have some indirect signs that suggest that investors start to change their opinion and start to treat the inflation overall statistics that we have a bit different. For example, if you take a look at the 10-year yield, you'll see what is going on. While the temporary stands on the table, and it was common just within a month, we should get an announcement of the changing in the policy. Take a look at what is going on in interest rates. Interest rates are falling. This is supportive to the dollar rivals, and the euro in particular. And this particular means a change in the sentiment. And it means that as euro currency as gold could proceed higher in the nearest time. So something is changing in the minds of the investors on the markets, and they start to look differently, and the same information that we actually have got already for a few months. And also, guys, I keep in mind the target on the dollar index. So if you remember, I'm talking about this every time. So 87.4. This is major monthly target that we have on the dollar index. And just a few weeks ago, it was really a big question. I just can't imagine what particular driver could lead dollar to the 87.4. So it was a bit difficult to suggest what particular it could push it significantly lower. Currently, if you could see, if this trend will hold and market will drop back to the 1% interest rates, dollar definitely will get the chance to drop. And if it will be extended in time, for instance, Fed will postpone the announcement of the tapering, or something will happen with the statistics, maybe it will become worse, and investors' expectation will change that Fed will get the chance to postpone this tapering. That really could lead market to on the euro currencies, could push it higher, while in the dollar index will get the chance to complete the major monthly target. It means that although reversal in general stands somewhere close, on the dollar index, this is still not yet the point, and we just need to keep an eye on what will happen. Our first data that we will keep an eye on is, of course, will be non-farm payrolls released this week. And from that standpoint, and in the shadow of this action, recent price action on the euro currency, it should be treated as just a technical issue. So the fact that we expect a minor pullback here is not the reason of the sentiment changing. This is the technical situation. When the market hits the resistance, it should show some respect. But overall sentiment on the background of the dropping interest rates stands positive. And currently, we of course will take a look how market will respond on some intraday support areas. But in general, if everything will stand the same, some extension here should happen. So some upward continuation here really could happen here. That's what we intend to keep an eye on. Besides, we dedicate lots of time to discussion of the situation in the weekly and daily chart with its divergence, with the pennant on the monthly and weekly chart. So, and we already said that, well, some few opportunities exist for trading this situation. We're choosing the more conservative approach when we do not intend to take position directly on the weekly chart, placing the stop somewhere below this B point and watching what will happen. We're considering some retracement and see for the patterns. So that's what we intend to do on the euro currency. Currently, our stop, it seems, starts working, so market hits resistance area on Friday. This was a very bad and fib level, and we said that let's keep watching what will happen. So this bounce here probably should be done because market has formed bullish reversal swing, and usually after the bullish reversal swing, especially if you see this downside action is very strong, it should be some moderate retracement, usually 50%, 618. That's what particularly we intend to keep an eye on. So on the 4 time frame chart, take a look. This first leg has been formed. Now, after the recent this type of action here, downside continuation, we could consider this A, B, C top pattern. And let's take a look. The pattern creates two agreement areas. So first one is with the first level, 1840, 1848. It's OP agreement. Next one is XOP agreement, 1803, 1811. So no doubts that this level would be just perfect if we will get it. So great price to enter, very small stop that we could place here, slightly below this area, and just keep watching. But as it usually happens, we can't ignore this agreement as well. So although chances and in general odds suggest that it should be deeper retracement, but we do not know what will happen. Before the non-farm payrolls release, probably investors will close some positions, and this downside action has not a bad chance to happen. But I think that probably we should pay attention to this area as well. So if you haven't plans to take the long position here, maybe it makes sense to consider taking some minor part of the position somewhere in the first agreement. So at least the 30% of your position. If market will drop below it, you will add more than 70% of this area. But chances that market will hit the first agreement, completing just AB equals CD, and then starts upward action are not equal to zero, so they're above the zero, and it's really could happen. That's why I think decide what to do in the current situation, whether you intend to consider this a level or you will be waiting for the next. This is a technical issue, so you could make the decision by yourself. Currently on the hourly chart, you can see our 3-drive pattern has worked nice. Sorry, not 3-drive, 222 sell, as we discussed on Friday. And did some bounce has happened here. If you have taken the short position here, you could place stop there and be watching for downside action. That for scalp traders, so if you trade on the hourly chart, we said on the lower time frames, that's the minus stop that you could consider. So don't ignore also this level. This might be considered as a target of the downward action if you're taking the short position here. Do not marry with any short position currently because they stand against the major tendency. It's very tricky, and try to protect your position with the break-even stops as soon as possible. Finally, as you can see, market takes the consolidation in a triangle shape. So for a short entry, also keep an eye on the possible breakout of this triangle. So once this will happen, it tells you that we should get definitely to this level, and hopefully we'll reach this one. But currently it's difficult to say whether it will happen definitely or not. So that's our view on euro currency, guys. Let's keep watching what will happen.